Hello, all of you beautiful people. Mike Ferrossi and Johnny Fowler back with you for another episode of Fly the Flag. We're a mortgage show, talking to mortgage people about mortgage things. How you doing today, Johnny?
I am doing absolutely amazing, awesome. Getting ready to an awesome week. I'm getting ready to record some videos for some of the training classes I'm doing. And again, we've got another amazing guest that we get to talk to today that I just love his insight and his reach. That's the biggest thing about this guy.
Absolutely.
Absolutely crazy.
And you've known him for a long time. I just met him. Many people out there would know him as Andrew Berman. Johnny, I'm going to go ahead and let you take over the intro because you can do him more justice than I can.
Yeah, not a problem whatsoever. So we're going to bring on my friend, my personal friend of 20 plus years. He is head of engagement with Ambiz Media. He was formerly one of the owners of National Mortgage Professional. I think they actually had 50 magazines. I mean, it was just absolutely crazy.
Yeah.
But Andrew Berman has just been an absolute, not only mainstay, but he is an icon and an anchor in this industry. And as time goes on, it will be one of those things where everybody reaches out to Andrew at some point in time. So with that being said, Andrew Berman.
Thank you so much for joining us from the mobile office today, Andrew.
That's right.
Well, Andrew's in New York, so everything's got to be mobile.
That's right.
I mean, no, come on. These guys say, join me on the podcast. I think a podcast doesn't have video. It's a podcast. It's an audio. And then, of course, Johnny corrected me. He said, yeah, of course. But Joe Rogan, we're going to tell him to stop doing video. So, yeah, thank you.
It's
so
okay.
much.
And Andrew's a traditional mortgage guy in a sense that he's a little behind when it comes to technology. So it's okay.
He's younger than I am. He should know better. Good God. He's got dozens of people working for him doing this stuff. He should know better.
Listen, I do. And we have a podcast, and it is an audio-only podcast, The Principal. Yep. Shameless plug for our awesome daily podcast, The Principal. It is audio-only because there's things that you can do on audio that you just can't do with video.
AM radio is great.
Absolutely. You can deprive people of seeing your face and building a general connection. Audio is great for that. Strangely enough, we publish the Fly the Flag podcast on all of the audio podcast platforms as well. We just go the extra mile for our people, for our listeners who would like to be viewers.
And for those of us who actually like audio only, when we're actually in the gym or driving in the car, we're going to have a less than perfect audio experience to sacrifice for those people who need pretty pictures to look at all the time.
It's okay.
If I had any feelings, that may hurt.
They forgive us. They forgive us. The only downside of video is that they got to stare at us the whole time that they're watching. But that's okay. Close your eyes, minimize that window, turn the volume up. You guys will have a good time. You'll have a good time today.
That's the group that's in Andrew's, age range. They can listen to us while they're at the gym or, when they're getting their colonic or whatever it is that they have to do.
Oh,
okay. Now that we've successfully cut our viewership by 80%.
Both of them.
Let's go ahead and give some valuable mortgage information to all of our remaining listener.
Both of them.
By the way, shout out to Mom.
Yeah, right.
Yeah, my mom just disconnected because she offended us.
All right. So here's some things that I want to go over, if you don't mind. And Mike, I want you to run with a lot of this because guys, I really want you guys to become friends.
Great.
So Andrew, you've got a different pulse on the market than, let's say, somebody who has a local presence. You've got a pulse on the market across the nation. You guys put on, I don't know how many shows that you guys put on in a monthly basis, in a yearly basis. I know that you've got Texas Roundup, you've got Originator Connect, you've got Mohican Sun, all of these massive ones. But then you also do the little shows all across the nation. Tell me what you're seeing out there. Tell me just a 30,000 foot view, an elevator version. Tell me what you're seeing and hearing, what's going on with Ambiz.
Okay, so this is exciting times. I know actually
Agreed.
it's very if we look from a numbers perspective, it is as ugly as we can get. Margins just shrinking, volume just like scary levels. Like I talked to someone yesterday. His volume is down 50%. He's got a large, doing about $1 billion of business a year. Their volume is down 50%. And I mean, like he told me that, and I got actually like I got sick, and I'm like, and he's so relaxed and excited because what he is actually looking at it. He's like Andrew. It was very easy to bring in the business, when in 2020 and 2021, but now is the time actually to take all the money that they made and all the lessons that they've made to invest in the business, and so what they're doing actually, they're investing in their tech stack and they're investing in their people. It was very difficult to take people away for doing training, take people away to focus on new technology projects over the last 2 years, but now we've got the time, and fortunately, a lot of us have the capital to be able to invest back into our business. So, yeah, we're going to see a lot of mergers, a lot of acquisitions, a lot
Absolutely.
of just people just plan up handing in their keys, trying to at least take the cash out of their business. But we are going to see the next mega players being built right now.
Amen. I've got something I want to add to that. So, and you may not know this answer right off the top of your head, but the gentleman you're speaking about, just give me a guess. I mean, how many years has he been in this business?
So
10, 20?
I definitely more than 10. I'd probably say, because he was there, in 2010, I believe is actually. Oh no, he started mid 2000s actually is when he got into the business as an originator, became actually a broker, had some success as a broker, and at some point said, hey, I want to become a mortgage banker.
So my point to the question is this. I've got empathy for everybody out there within reason. But if anybody in this business thinks that typical business is 2020 to 2000, end of 21, if anybody out there thinks typical business is 2002 through 2005, I lose patience very quickly with anybody out there that thinks that there's not business cycles, that hasn't listened to, your systems, listen to Barry Habib, listen to Dave Savage, Renee Rodriguez, everybody in this business, and don't realize that this industry has a cycle about every 6.7 years. And if they don't plan for that, I've got very little empathy for those. And it really drives me insane this time, when it goes through. And you see all these massive layoffs, and you see all this, that's something that happens. There's always been a joke in this industry since I got in 1994. October is layoff month, kind of thing. But anybody who didn't plan for it, it made me feel really good when you said that about him stacking away cash. Now's the time to invest. Get ready for the next business cycle. He's going to do something. These people out there, and Mike, I don't know if you got to edit this out or not, but these idiots out there that think that this business lasts forever, or the downturn. Hell, we still got people walking around talking about 2007, 2008 like it was yesterday.
Sure.
What's your thoughts on that?
I'm gonna give a quick take, just because I don't know.
I want you to.
Maybe I'm a little nicer than Johnny. I give people a little bit more credit. Okay, so from an empathy perspective, I have empathy for the people who just got in the business because everybody was staffing up because they couldn't handle the volume over the last couple of years. There's a lot of originators out there who are newer to the business, 2 or 3 years in the business, and they think that 2020, 2021, beginning of 2022 is how business is because that's how it's always been for them.
Agree.
And just because they didn't have a leader or an educator that they could depend upon to teach them about these swings and things that they should anticipate and how they should be socking some money away in the savings while they're making money hand over fist because all you have to do is roll out of bed and fall into a pile of loans. That's not their fault.
Agree.
But Andrew touched on something super important, where there are business leaders out there who are investing in tech stacks, investing in their company. Now let's be 100% clear. Technological investments are worthless without proper intent. But the companies who are making intentful technological investments are building the next, what you call them, super companies, mega players. And there's a lot of newer, hungry loan officers who are kind of in a tailspin right now just because they don't have the knowledge, because they shouldn't have the knowledge. They're newer in the industry. Maybe they've recently been laid off. Maybe they've seen the leads that they're working cut to 20% of what they normally are. Maybe they're trying to figure out what the heck they're going to do to pay the bills, and they would love to align themselves with the next mega player for the future. What type of technological investments, what type of attitude, what type of forward thinking, Andrew, do you see out there that these loan officers should be looking for when interviewing their next company to go to?
Great question.
It's so funny, but because I like literally why you're actually building up to the question, I'm like, what are these guys doing? What's in their tech stack? What are you guys doing? But I'm so generally speaking, what what I'm seeing is the push to just make it easier for clients to get their documents to us. Try to actually get to that data as fast as you can. Be able to get to the yes or no faster. And really, actually, like it's embarrassing that we're celebrating 15-day closes. As an industry, where if you can close a loan, from application, to funding in 15 days, you are considered, it's rarefied air. You're considered actually doing a lot better than your peers. It's disgusting. It's disgusting that we're actually all of the data to make this decision is already out there. I know actually we have some regulatory things that we have to adhere to, so we can't just close it instantaneous. But I think actually that I'm seeing a lot of players trying to do whatever they can to shorten that time from application to close, to do whatever they can to try to actually get their borrowers to have a better customer experience, through uploading documents and communications. I mean, that's really what I'm seeing. And there's also people actually are trying to do whatever they can to kind of invest in their systems to give them better reporting, better data, better analytics, based on not just traditional numbers.
No, that's beautiful, and I'm with you 100% on that.
I want to put out one quick question for every loan officer who may be in the market for a new to move to a new company, align themselves with somebody else. Everybody's going to pitch you on their technology right now, and all that technology is going to be proprietary for one reason or another. Ask about UX. If the company you're talking to isn't passionate about user experience, then it doesn't matter how good their technology is, because they're not designing it for the end user.
And I'm going to tell you that 90% of the companies out there are just buying off-the-shelf technology and talking about their tech stack.
Oh, sure.
And they don't actually have something that is proprietary. They may have something that's white labeled, and their systems don't talk to each other. And I'm 1,000 times with you on that.
We came off a great conversation yesterday about APIs and getting all the systems to talk to each other and transfer information from one to another. And if that's not dialed in, then you just have a bunch of tech silos that need humans to move information from one place to another.
I've got a question. I want to hear both of your responses on this, but I really want to hear your thoughts. I want to expand on them. So here's one of my things. So for so many years, we've done this. We buy software, blah, 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 things like that, and we keep doing it. So we all have heard the old cliche, if you make one person happy, they may tell another. If you make one person mad, they're going to tell 10. Sure. We've seen the companies. We blast them. We see it all the time. One of the things that I really want to get to the point to in this business is where I see a fail in our industry. We hire a tech guy, we hire a chief information officer, whatever it may be, and that person knows nothing about the mortgage industry, and we put them in control and charge, and they're the one who decides what software we're going to use and what talks to each other. Just like in most companies, or in a greater amount, and you guys have seen this throughout also, you'll see the marketing team or the marketing department that is marketing for a title company or an insurance company or a mortgage company.
Yep.
And they're 22 years old. They've never owned a house. They've never been to a closing. And now they're put in charge of this. Tell me what your thoughts are, because that's one of the things that I'm begging to see is at some point that we will learn from our mistakes and stop buying software that doesn't talk to each other and start paying attention to that customer experience, that user experience. So what are your thoughts on that?
Go ahead and take it, Andrew.
So, it's interesting. Like there is a definite massive disconnect with unfortunately marketing departments and mortgage companies because in so many cases, like mortgages are driven by the originators, who put actually their product out in the street through creating relationships and. I think actually a lot of mortgage companies have marketing departments that are just not necessary. As crazy as that sounds, listen. I just this morning. I was poking around actually some Facebook groups, just trying to I've got a couple of different local groups. I just kind of see what's going on actually with my local markets because obviously I want to know what's going on nationally, but what's going on locally, it affects a lot of my personal friends that are in the business. So I noticed actually there are two companies specifically that you can tell actually the person doing the marketing has never had a mortgage, I don't think other than their own employees has had conversations with originators. I think actually the best thing actually that we should be doing as a mortgage company is creating more relationships between the originators and the communities that they're serving. And to me, actually, it's don't put product promotions out there. Don't put actually even company promotions out there. Put actually what is that originator doing, and why is that originator passionate about the work that they do? Obviously, video super important to show that originator's passion. So I think actually that's a super important thing is actually to.
So originators should not engage in audio only activity. Is what you're saying?
I'm with you. I'm with you.
Yeah, 100%.
Who in your audience really cares that USDA got funded again? Who in your audience really cares or even knows? This is one of the things I'm watching right now. And to hit on your point you just said, Andrew, was I keep seeing all these marketing departments putting up Fannie Mae moved to 715.
Just going to touch on that. They're going to get that information from the Wall Street Journal.
But it doesn't matter because most of the world, most originators, I talked to one yesterday, good friend of mine down in North Carolina, talked to him yesterday. That's one of the things that his company's doing. I said, I'm just going to say his name is Jonathan because his name is Jonathan. Jonathan, what's your average loan amount? And he said, it's around 220 or something like that. So why the hell are you talking about 715? Because your client doesn't understand what 715 is. It has nothing to do with their life. When they hear 715, that's seven figures to them. It means nothing to them. And to your point, Andrew, it's because it came from somebody that really doesn't know what it is that put together a pretty graphic that doesn't work on social media.
Can I propose something when
Please.
it comes to marketing departments in the mortgage industry as a whole? Can we stop marketing and start branding, please?
But wait, what are we branding? Are we branding the human, or are we branding another company, another name that people don't really care about?
From a loan officer perspective, you want to brand the human.
Yes.
You want to brand the loan officer, but it all depends on what the business strategy is. If you're a marketing department that's helping a network of branches that are filled with loan officers that are actually feet on the pavement, beating the streets and walking into realtor's office. Those are the people that need a personal brand.
Amen.
If you're building a technological platform to rival Rocket, then you need to be branding whatever that technology is, whatever the company name is, whatever the cell is.
Push button, get mortgage.
Absolutely.
Yeah.
Absolutely. Because I mean, at the end of the day, and I love what Andrew said earlier. I just got to circle back to it. The fact that we're celebrating 15-day closes is pathetic because, quite frankly, I can go online and do my taxes in like an hour.
Yeah.
And TurboTax makes it super duper easy. I know that's what I have my eyes on building. I want to take the mortgage process and TurboTax it as effectively as possible. That's what I'm working in the background with AFN on and things like that. We have a lot of technology updates that are going to be announced very soon for late September, early October. And from there, I see all the pieces in place. To circle back to what Jonny was saying, as long as we can make a few key integrations talk to each other in the right way, we're not far away, man. We're not far away at all.
So what do you think, and maybe this is something that you guys don't have yet, or what do you think, it takes for a mortgage company, to have actually, the best possible digital experience that most mortgage companies don't have right now?
So, this is something I'm working on branding. I'm going to keep it close to my chest a little bit, but I'm just going to walk you through what I see happening for what I'm trying to build and what I'm trying to brand for the next year. I see somebody come across an educational YouTube video because they want to know how an adjustable rate mortgage works. So they're interested in some sort of a down payment assistance program. Yeah. And maybe it's a post on Facebook. Maybe it's any sort of branded advertisement, post, or whatever that they come across. And they say, that's interesting to me. I'm going to click that button. They click that button. They're directed to a very simple 2-minute kind of a pre-application or a short application, so to speak. They share a little bit of information. It gets kicked over to a loan officer who can make a call, connect with them, develop a relationship, and take it from there on a traditional process. But simultaneously, because loan officers aren't going to be able to call instantly, not like an integrated API would be able to send out an automated email, they receive an email with their personal credentials to the online system, which is mobile friendly and computer friendly. They can log in however they like. It's going to TurboTax them through or easily walk them through completing all of their 1003, filling out all fields just because it's a step-by-step. There's no way to mess it up. It will allow them to upload all of their documents right then and there. It will allow them to pull their own credit because they've already given permission to do so. It will run DU or LP so it can get them a pre-qualification and an actual automated approval on a conventional loan with conditions. If they want to sit there on the computer and read through those few conditions and satisfy them, they can upload whatever documentation that they need to. And then they can submit their own loan to underwriting because we have an automated underwriter in the background using optical character recognition who's actually going to read their documents and underwrite everything and give them a full-blown loan approval subject to appraisal, which they can then order and schedule. And at any point in this loan process, if it becomes overbearing or they just don't want to do all of that themselves, that's fine. We have a phenomenal mortgage expert who's ready and willing to take over the process and do everything for them if they want to. But giving someone the 24/7 capability of handling, managing their own mortgage will give the younger generation who tends to want to do things online on their own a way to actually treat their mortgage the same way as they would treat completing a purchase on Amazon, doing their taxes on TurboTax, or opening a bank account.
So now let me ask you this. So do you think, because I mean, for that entire process, there's no originator unless actually they hit the button to get help to speak to an originator, right?
So an originator does need to be involved because, federal government says so. And the originator will reach out and make contact when they need to reach out and make contact. But at the end of the day, if a borrower has educated themselves enough to where they know what they want, or they've bought a bunch of properties, and this is like the 7th property that they bought, they got 5 investment properties, they're selling their primary, they're buying a new primary, they know they want a 30-year fixed, they know they want a Fannie loan at a certain interest rate. If they can go online and submit all that information that they've done many times before and just get the process going and save all of those days in the interim, then there shouldn't be anything keeping them from doing that. They shouldn't be handcuffed by emails back and forth, missed phone calls, voicemails, text messages, things like that.
So I think that's a great idea. I think that there is a percentage of the world that will work for, and it will work very well for.
Absolutely not for everybody. And again, I'm a huge proponent of the fact that not every business model is for everybody. Not every product is for everybody. And the pie is big enough for everybody to have a piece.
But I think what that will do is it will help the rest of the industries get into that cadence. But I will tell you, Andrew, this is for me, and mine is very simple. The first mortgage company that pays attention to Pavlov's dog theory will win and will dominate over every other mortgage company in our business, period. There is no doubt in my mind it will work for the greater good, the greater majority, as long as they read Pavlov's dog and they understand it. If a mortgage company will do that, and they will move faster, because in reality, if I'm going to use a mortgage company once every 6 to 7 years and go through the pain of doing it, their technology, it says something, but I don't really have anything. So I can go to Macy's or I can go to Dillard's in the same day and look and see, as opposed to 2 different mortgage companies. But the first mortgage company to market that understands Pavlov's dog will win, and will win big against any other mortgage company out there.
Interesting. So first off, am I the only idiot that doesn't know who Pavlov's dog is?
I guess so.
I'm sorry. So here's the simple 15-second Pavlov's dog. If I want you to send me every page of your bank statement, including the blank one, and you send it to me, I give you a chocolate. If I want you to fill out your application by 8 o'clock tonight and you do it, I give you a chocolate. And that's the one. You reward people. Think about this. We will
in less dehumanizing terms, let's call it gamifying a mortgage.
Okay, sure. See, we didn't live in such a political world back when Pavlov said it, so I guess now we have to say that.
That's right, but gamifying is huge. It's providing people
they will fill out that credit application to save 10% on a $50 purchase.
Yeah, that makes sense.
And it could be as simple as just letting them know, hey, if you upload all this right now, you're going to save 48 hours off the standard loan process. Because you're not going to have to worry about emails back and forth and stuff like that. It's providing the incentive, right?
Yeah.
I think that's a highly educated borrower, and I think that's somebody who is a DIYer. There's no ifs, ands, or buts. I really love that idea, Mike, and I would love to brag about being one of the first to market with something like that.
Absolutely.
So here's the way I look at it. If I was an originator today, and I'm out there on the street, but my job would be basically 3 things, and one is actually going to be doing whatever I can to kind of set up funnels. Set up actually relationships with real estate agents, attorneys, financial advisors, setting up relationships with PNC shops. So setting those up, that's number one. Number 2 is making sure when it comes time to explain everything, that I am there to explain the different options, to explain why we should be looking at a 5-year arm instead of a 30-year arm right now. Whatever that conversation is, I want to make sure that's number two. And number three is if things go wrong, because once in a while they do go wrong and don't go as according to plan, they you're there. Now, if you heard that none of that actually had to do with the application, chasing down paperwork, like originators should not be a part of that. And when they're setting up their relationship with their referral partners, those funnels, they should be able to go and to say, hey, so just so you know, we have many different paths. If some of your borrowers are more tech savvy and they want actually to be able to do this, the
absolutely
DIY,
we got there.
And do it all themselves. They can do that. They have that option. If they want to, come into my office and speak with us, they can do that. They can do a hybrid of these, and I think actually, the ones who are going to win that are going to be the ones that focus on their process and giving actually the most options and the most opportunities to do business with them. I think like that's what I would do. So if I was originator, I'd be focusing on those three activities, and doing what I can to hire people to help me out with the other activities, which, there's going to be less of some of those activities in many cases, which means maybe they could help us on those three primary activities: setting up funnels, working with the borrowers to explain actually conditions, and number three, dealing with anomalies that fall out of what's normally going to happen.
I love the anomaly point, because I can't think of a business relationship that has ever been hurt, for me personally, by me owning a mistake and then doing whatever I needed to do to fix it.
Agree. Good point.
And most of the time they just get stronger. It's a hell of a lot better than just telling them that it was your underwriter's fault.
Yeah.
I
agree.
Yeah, the illustrious they,
Yeah.
Yeah. I'm with you, partner, but that underwriter, you know how they are. One of the things I need to throw this in here, because one of the things where I'm so lucky and so blessed is to be part of AFN. So not only are we up on real technology, not just buying everybody's shit out of the box and putting that in there, but
don't get me wrong, we've done that too, but we've made it productive
of course,
to create to make the stuff we're working on now, the stuff we have implemented now, work much better than the out of the box options.
Our marketing manager is a proper age to use that title kind of thing. Our tech people, our originators are, it's kind of funny, Andrew, in this world. And I watch it every day. I watch it on the shows, and they're talking about the shrinking world and shrinking business, and everybody is. There's no question about it. But one of the things that's so cool is, and it starts at the top, no ifs, ands, or buts, but you see it constantly in our company, is we're sending out messages daily about how we're growing. I'm talking to the guys that I report to the other day, and we just brought on 2 companies, not branches, 2 companies that are about $1 billion a year. So we just brought on these 2 companies that equal about $1 billion. We just added $1 billion a year in business just in a 60-day period on top of the branches. People are flocking over here.
And knowing our model, I'm sure all they did was decrease their operating costs.
That's exactly what they did.
And increase their earnings potential overnight.
Exactly what they did.
Yeah.
It's exactly. If you're in shrinking margins, have somebody else take over your operations, bring your production, get paid the money that you are. One of the things, Andrew, I don't know if you know this about us, and it kind of blows my mind. When I got here, I'm thinking, wait, this is kind of strange. We've got DBAs. We've got teams. We've got catchphrase, things like that. I'm going next week. We're doing a corporate event out in California. Week after that, I'm going to Northwest Indiana. And it's so funny because the reason I'm bringing this up is my wife saw one of my videos on Facebook one of the advertisements, and she said, "Why are you doing another mortgage company? I don't understand that." That's the whole. It's not.
It's actually us. Yeah.
New Millennium Mortgage is powered by AFN, and they're a high-producing mortgage team out of Northwest Indiana. So there's some really cool things over here. I want you to come out to California. I want you to see it. We're going to be in New England pretty soon, in New Jersey and New York, and I want you to come and be part of it.
That's great, man. That definitely would love. I'd love to. Remember, Jonny, we were told a lie. It said actually DBAs are not allowed. I guess it takes actually a company committed to making sure that it could happen.
It's
you know how to do it.
Over the last 8 years, I've learned that there is no end to how entrepreneurial AFN really is.
That's great.
And I've experienced that firsthand as an operational employee in the past as well, wanting to start a new concept or boot up a new operational department. There's no other company where the COO could have said, "Hey, write me up a business proposal. Let's take a look at it." Like, just the fact that was a possibility, it was just mind blowing.
I'm glad you hit on that. Here's one of the things that I think is part of it, Andrew, and you and I are kind of used to the mortgage company that's run by some 75-year-old white-haired dude sitting in the back room that has no idea what's going on in today's world. And I'm just guessing. I don't know exactly. I know that I am older than the owner. I know that I'm older than the COO, and they're approximately the same age. I think they were they went to college together.
Yep.
I know that the guys that I work for are barely in their 40s, and that's one of the things that's so cool about this is you don't hear that because we've always done it that way. We've done it this way for 20 years. That's the way we've always done it. One of those things. I'm not kidding. I was in a discussion the other day we've got an attorney that runs our compliance department, which is freaking brilliant to me because I love the idea that somebody actually has not only a degree, but an education behind it to help make these decisions, as opposed to having that 150-year-old compliance officer in the back that doesn't even know. Are you talking about MySpace? You've got mail. Anyway, so I'm talking to this guy, and when we're talking about it, I'm explaining to him the difference between business pages on social media and community pages and organic traffic. And he's young enough to understand. And he goes, "Yeah, I've got no problem with that. That makes sense. I understand that." And we made the change. We made the change right there. And I'm still watching some of these companies that are so stuck in the 1970s, and they weren't even around in the 70s. I love this company.
That's fantastic.
Andrew, what else you got from a conference perspective? I know we were talking a little bit earlier before we actually hit record on this, that now's a great time for people to invest in their business. But let's take this off of the macro. Let's get out of the 30,000 foot level and see if we can bring a little value and make some suggestions to actual individuals who are looking to thrive in their areas, in local markets, loan officers, branch managers, and whatnot. What type of things could they be doing right now? Maybe not to invest a whole lot of money, but business is a little slow. Maybe they have a little more time to invest right now. What type of local activities could people be doing to increase their outreach or educate themselves?
Okay. So, and you said as far as conferences, and I just want to comment on that. And unfortunately,
yes.
I have to wrap up. I apologize that, but I got to go pick my daughter at school. But so here's the thing actually that I think, in 2020, 2021, it was very difficult for us to go any place because of obviously COVID. But it was difficult to just stop production to be able to go to a conference. And since then, there a lot has happened in the industry. A lot of product innovation, a lot of technology innovation. So I think it's important to look at conferences again. But I think also, you want to go to conferences that are not in your area. Because one of the
Interesting.
things actually, yeah, here's the thing I love is when you go to a conference, that's in your area, people actually they're going to talk about their business and they'll share a little bit, but they're going to be somewhat guarded about actually, strategies that are working for them locally. So they might actually say, "Hey, I have this thing at a chamber of commerce," but then they realize actually if they say this, the person sitting over in the other table, is actually in their market, and they want them to hear that, and then they're going to go for the greater blah blah blah. Chamber of Commerce. So I think actually best thing you could do is invest in national conferences. We have our Originator conference, which just happened in Vegas. We've got the New England Mortgage Expo coming, and we have a couple of other regional shows. But obviously, there's tons of conferences out there. When you go to the national shows, there's a lot of great things actually that can happen in terms of people sharing with stuff that they're not worried about sharing with competitors. And the other thing is like, right now we have the ability to try new things. Maybe actually maybe we should be. I know Johnny hates non-QM, but maybe we should be looking at non-QM.
A little birdie told me that he's coming around to some of them programs.
Listen, it's the reality is actually that when you have companies like you. Who have vetted actually every lender you deal with. I mean, it's not like you're signing up any lender that comes on board. But there's something to be said about it when large companies like you guys are putting the stamp of approval on these products. I don't know necessarily they need to go down to a 1-month bank statement. But there are definitely responsible programs out there, and there are borrowers that have just been programmed to think that they cannot do loans because unless they're going to recast their taxes for the last 2 years. And I don't know any business owner who does that or wants to do that. So I think actually, listen, it's a great opportunity. Start investing in yourself. Start investing actually, and going to conferences locally, but definitely nationally to get other ideas and just be excited. Yeah. We are. Yeah.
But before you jump to go to grab your daughter, is there a website that people can go to check on the upcoming conferences that you have going on? Anything scheduled, things like that?
So nationalmortgageprofessional.com will bring you everything. It'll bring you news. You'll see our magazines. We've got 3 magazines there. There's National Mortgage Professional Magazine, Mortgage Women Magazine, and Mortgage Banker Magazine. You see, actually, we have a daily podcast, audio-only podcast, like podcast was originally intended to be, as God created it. And we have a daily video show because it has video. Not to be confused with the podcast because that's separate. But the great content. Sometimes the topics get a little controversial. Sometimes they're little funny, and sometimes they're just ugly and scary, and but it's real. And so nationalmortgageprofessional.com, you'll get the list of events, all of our webinars, and all of our other stuff we're doing. Thank you guys so much for having me on here. Johnny,
thank you for being here, man.
I love actually having been a witness to seeing what you've done, with your career, and not just your career, because it's not just your career. It's the career that you've made for the branch managers and the originators that have worked with you. I've seen some unbelievable things that people have said about the transformation that you've had on their business. And Mike, man, this is great. I'm glad actually we had a chance to connect. And yeah, Johnny, I think you're right. We are going to be actually friends now because I like Mike. Love your attitude.
Thanks,
man. Thank you guys for having me on here.
Thank you so much. And after you get done with this, I want you to go to the shop, take your air conditioner out of your car, because cars didn't come with air conditioners back in the 1900s. I want you to take that glass roof completely off, take those mirrors off, and I want you to get back to just so you can listen to your podcast. Oh, wait. You got to take stereo out because cars didn't come with stereos back then to listen.
As God intended it, right?
Love you, brother.
Thanks so much, Andrew.
Johnny, you can go.
I want
stuff.
you guys to be friends. I truly do love and adore Andrew and his family and his people. I
Oh, we got to put somebody on the spot. Who's slinking around behind you right now?
Oh, nobody's in here.
Hey, Bethany, how are you? Does the pod get your seal of approval today?
Of course.
Awesome.
It usually does.
It's funny. I got a kick out of it because as we're talking and as we're interviewing Andrew, I get a text message from another, lifelong friend of mine that used to be a branch manager for me years ago. He sends me a message, and he works for a different mortgage company now. And he sends me a message, said, "You guys licensed in New York?" And I said, "Yes, we are." And he goes,
"Absolutely.
Can you get me a loan officer in New York?" I said, "Yeah, give me an hour. I've got to get off of this podcast that I'm on, and then I'll do it." And he says, I said, "I'm doing a podcast right now. Give me an hour." And he says, "I am too. My podcast is on people who use podcasts as an excuse not to get back to people." What is
I like it. It's good. That's good. It seems like a one episode special edition, but that's got legs, man. I like it. I want to make something real clear for anybody who's still on with us, all of the listener who is still here with us after 45 plus minutes. We love the company we work for. We love AFN. We champion everything that they do, but we're well aware that AFN is not a unicorn. There are plenty of big mortgage companies that are doing great things, and the information that we're giving isn't always specific to us. That's what we know, so we can speak about it more knowledgeably, but we're not trying to give hard sales pitches on why you should come explore, come in it or anything like that. It's just, we know that there's a lot of people in the market for a new place to be right now. And wherever you're looking, keep this stuff in mind. Just keep this stuff in mind, because if you're looking to make a move, we're going to assume that you're looking to make a move into something a little more permanent, into something that's going to be long lasting, something where you can build a little staying power. And these are a lot of the things that companies with staying power are doing right now. So just keep all that in mind as you're out there, whether you're entertaining offers or not.
I appreciate it. Hey, as always, Mike, appreciate you. So glad and happy and blessed to be doing this with you.
Likewise,
and
brother.
Just absolutely enjoy it. Have fun every single time. And your insights and your education and what you bring to the table is by far second to none. And I appreciate being part of it.
Thank you. Likewise. I think we got a good little thing going here. We should keep recording these.
Yeah. Even by the way, bye, Mom. Even if my mom's the only one listening.
That's right. That's right. Yeah, because my wife definitely won't last this long.
No, she listens to that shit all day long. She doesn't have time to listen to it. Yeah.
All right, everybody. Thank you for being with us for another Fly the Flag podcast. We appreciate you, and we'll talk to you next time.